in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and this edition of the Moving Iron Podcast is brought to you by Dawsontire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom, delivering insights and dry shod boots, the official work boot of the Moving Iron Podcast. Shawn, how are you doing this morning?
I'm cold but optimistic.
Cold, Florida cold. Let's put an asterisk beside that.
Well, it is 38 degrees here in Orlando, which I'm a little further. I'm up north now. I'm up north.
Oh, okay, way north. Man,
I'm in the mountains north.
Would that be considered the far north that it would be of northern aggression if they came that far south to Miami? Is that how that works?
Yeah, pretty much.
Right on. Well, Shawn, it's been a week since we talked last, and the markets have done a few things. And if you kind of watch, I'm starting to see some resistance levels that we're starting to bang up against, and it looks like that 420 to 425 range on the corn marketplace is where it looks like that resistance level is in right now. You start looking at what's going on with ethanol and the price of fuel and the way that's starting to look. There's getting to be, you and I, as we've talked about here a million times, and anyone that follows the marketplace knows this, but cheap gas is bad for ethanol. So as we look at those, right now I think in Scottsbluff it's usually one of the more expensive places to get fuel in my immediate area, but we're like $2 gas right now. So I guess as you look at those resistance levels and what you see happen with ethanol, what's the chance of corn jumping up past that and making a run here towards the end of the year?
Well, I think we said this in last week's report, but your last week's podcast, but it's going to have to be South American weather really getting to the critical point. I don't see us breaking out either soybeans or wheat, the $6 level on wheat or on KC wheat, or the $12 level on soybeans, or that 430. I don't see us being able to get over that hump right now unless we really get into, moment of truth, that irreversible point where you say damage has been done and it really can't be reversed now. And we're not really going to get there, Casey, until late December. And right now there are some rains falling. I mean, they're not, I wouldn't say they're drought busters, but it's enough rain to say things are stable for now. Why worry? And we're at the end of the year. Speculators like to liquidate oftentimes into year end. And so it's just a period of pause. We think it's a period of pause, and we think, we could have some corrections that could get ahead of steam here as we move into the end of the year, and could offer some, buying opportunities for livestock producers to get some extended coverage on feed. There could be an opportunity there that we're looking for. So, yeah,
that was the next thing I was going to bring up, was the growing conditions in South America. As you take a look at what's going on right now, they did have some rain in the forecast, had some scheduled in there, and by all estimates, and everyone that hadn't mentioned anything about it, was, even if it did rain as much as they said it was supposed to, it's nowhere near enough to get things perked back up the way they were going. Monday there's a pretty decent sell-off. Of course, that might have been the end of the month, taking some profit, and also, but some of that rain might have been baked into that a little bit too. The situation there is not getting any better. It's every day is getting worse than it was the day before, and it's just continuing to struggle.
Remember, Casey, December and January is our two rainiest months of the year. So yeah. It normally rains massively this time of the year.
Right.
So even if they get, they're going to get an uptick in rainfall in December. They're going to.
Right.
But if it's half of normal, it's not good enough, because that's when they need the big rain. So you got to keep this in perspective. But for now, at least, the market will say, well, let's see what happens. It's raining a little bit. Maybe it'll get better. We'll give it till the end of the month to see how it goes.
Yep. So with the situation we see there, and assuming that they don't get what they have, how important is this January report coming up? With the time the USD has had to go back and take a look at crops and harvest data and those kind of things, the January report should be kind of fairly, I don't know what's word I'm looking for. Should be fairly up to date and ready to go by then, based on the harvest data from the various FSA offices.
Yeah, in drought years, I mean, they usually by January they get it right. They get it right, and so that number will be a number that will have whatever they say. That's the number we're going to be dealing with old crop stocks for 2021, pretty much. So, I don't believe the yields are low enough on corn. As you know, we've been saying for a long time, the low 170s. I don't believe they're high enough on demand. At least I think corn's too low. They might be right on soybeans, but I think corn's too low. So, we should get tightening stocks in the January report. However they come to that, whether they increase demand or they lower the yield or they change the acres of one final time, I don't know. But I do believe we're going to get tighter stocks. And if we're getting into a South American weather market while we're telling everybody that be really tight, that could set off the next wave higher in a kind of first quarter rally in grain markets. And so we would really focus on late December, early January as a focal point for a potential corrective low and a turning point. That's kind of what's in our head right now about how we see the pathway taking place here.
Right on. And that's kind of what most people are lining up to do that now. I mean, it's amazing how far that's come off from the private estimates of FC Stone of 184 down to maybe knocking on the door 172 to 174. So it's a big swing in the yield data in the year. But everyone just they're rushing out to get their name in the paper first.
When soybean stocks are this low, Casey, no one knows for sure what it is. The U.S. doesn't really know exactly what it is. Nobody knows for sure. But when you're at 180, 175, the margin of error is 25 million bushels one way or the other. 150 million bushels is bare minimum pipeline level. So for all intents and purposes, we really can't get any tighter.
Right.
We just can't get any tighter. So the question is, can South America produce a crop where we can get offline for a while and they can pick up the slack and everybody and the world's okay and China's getting what they need or not? That's why weather is so important here, because if they can't deliver on that and we don't have any more to sell, then you have a big problem on your hands, Case. You have a demand rationing situation where you have to go up to a level that people say, you know what, I can't pay that. I'm not going to pay that. It doesn't work for me anymore. I'm going to liquidate some animals because I'm just not going to feed bean meal anymore. Whatever it is. I mean, or I'm not milking any more cows because, $500 bean meal is too high for me. Whatever the situation is, So we're right on the cusp of that. We haven't had that happen since 10, 11, 12. The last La Nina we had at a trough of the 11-year cycle. And of course, now this is a grand solar. So we would expect this to be more impactful than even that one was. And of course, those 3 years, as you know, created $8 corn, $18 soybeans, and $12 wheat. We think this weather situation is likely to be much worse.
And more used equipment than we knew what to deal with. So that was,
for sure.
Everyone was buying new. So
yeah, they were. Everyone was flush with cash.
Oh my God, were they ever? Yeah, yes, it was. All right. So speaking of weather, you put out a report here last week, right after Thanksgiving, and talking about some of the climate change stuff that you've been paying attention to and stuff that we've been talking to on the podcast. And oddly enough, about the same time you put that out, so they must be listening to you, Shawn. The Chinese put out a report that they're going to open up more strategic reserves and start stockpiling more grains of soybeans and rice and wheat and everything else. So you must be paying close attention to what you're saying, Shawn. So they have that out there. But talk a little bit about the report you put out and how what you see happening with these different cosmic alignments and those kind of things, and how that all will work together with what we see with this La Nina event.
Well, as you know, Casey, we talked about in your program a lot, that we've researched heavily the idea of how our climate on Earth has always been modulated by the natural weather cycles of the sun, solar cycle, and the planetary cycles, and how those magnetic, electric, gravimetric, and rotational forces interact with each other to change our atmospheric airflow, change our ocean currents, change our sea surface temperatures, and ultimately change our climate. So that's why our climate is always changing. It is never constant. There's never been a time in history where we've had a steady climate. It's always either warming or cooling or escalating drought or escalating flooding. There's always something going on that's changing because planets are always rotating. The sun cycle is always changing. These forces are always interacting differently. What we tried to highlight in our podcast this past week to subscribers is every 60 years, there's this important, what we call conjunction. This just means two planets get really close to each other. And of course, the two biggest planets in the solar system are Jupiter and Saturn, which means they have the biggest forces. They have the biggest impact on interacting with the sun, interacting with the Earth. And so on December 21, Saturn and Jupiter are going to be as close to as they've been really since the 1600 year was the last time they were actually this close.
Okay.
They have conjunctions, but they're really, really close this time. So the forces, so just think of taking a magnet,
right,
opposite poles, and putting them together, and the closer you get, the more the forces are interacting. Right. Just think of it that way, right?
Okay.
So there's a 60-year cycle in what's called the AMO, or the Atlantic Meridional Oscillation, or the temperatures of the Atlantic Ocean, which is greatly, if sea surface temperatures are falling, global temperatures are falling. If sea surface temperatures are rising, global temperatures are rising. Sea surface temperatures lead ambient global air temperature. And there's a 60-year cycle of when those sea surface temperatures peak. They peak every 60 years. And it's based upon the orbit. I don't want to get too out there, but Jupiter has an orbit, just like every planet has an orbit. And just like we were just saying, nothing is constant. An orbit can be more circular at times, or it can be more elliptical at times, depending upon its interaction with other planets and the sun. Mm-hmm. And it just so happens that every 60 years, once this conjunction takes place and we move away from conjunction, the elliptical pattern of Saturn gets more circular. And as it gets more circular, it actually inhibits solar activity hitting the Earth's atmosphere, and it actually changes the currents in the Atlantic and the Pacific Ocean and causes sea surface temperatures to start to cool. So the last time that this happened was 1960. And if you look at the AMO, for example, and we had a chart on our podcast to show this very clearly, that the sea surface temperatures plummeted into the late 1970s when we peaked in our cooling scare back then. Back then everyone was worried about the deep freeze because it got so cold. The winters were so long. The growing cycle in the U.S. was only 140 growing days. It's 185 now. So we gained 45 days since then. And so what I'm getting at is that this should begin a very hard down phase in the AMO. And with that, the air temperature should start to fall. The PDO has already turned into negative territory, which is the sea surface temperatures of the Pacific Ocean in its entirety. We've already moved into negative territory. When those two sea surface temperatures are in synchronicity in the cold phase, it's really a hard down phase for global temperature. The big difference this time from 1960 or even 1900, when we had that was a conjunction before that, when we had the big dive in the sea surface temperatures and cold temperatures into the 1920s, those were not grand solar cycle minimums.
Okay.
This is the grand solar cycle minimum. So just if you look at how cold things got between 1900 and the 1920s and the 1960s and the 1970s under kind of a normal operating sun, and now we're in what's an extended period of lower solar, which accentuates the cold. We feel this is going to be much more aggressive cooling period that we think will trough or reach a crescendo to the downside somewhere in the mid to late 2030s before it bottoms out, and then we start the process of gradually, begrudgingly warming ourselves up little by little as we move into the 2050s. So that's kind of what we see, and so we think that what we always try to tell people, Casey, and this, we tell people to look for signs. Don't just Shawn, verbatim, listen to them, but verify, follow them. The signpost is watch the North Atlantic sea surface temperature. We showed this in the podcast. It's already been plummeting here in the last 30 days, oddly enough. and we've broken an uptrend line in that sea surface temperature chart going back to 1990. So the North Atlantic sea surface temperature leads the AMO down. So that would indicate that we are on track, that's heading down just as the AMO is expected to start to turn down in the first half of 2021. So the next thing we're looking for is to watch the AMO in the first half. If it starts to really falter and break its trend line, then Shawn's AMO 60-year sea surface temperature, global cooling, solar cycle, orbital forcing research is starting to verify yet again. And then we need to brace ourselves for a wild increase in weather volatility. And of course, we've been forecasting a crazy winter for the fall of 21 into the spring of 22. And that would dovetail into why we are expecting that and why that is likely to take place if the sea surface temperatures really start to plummet. It would feed into that negative feedback loop. So,
yep. So Florida could get colder is what you're saying.
It is. I mean, we are going to have frost. The citrus belt in Florida is going to start to have frost again. We really haven't had a frost here of any concert since 1986, just as an example.
Right.
But yeah, we would expect Florida, maybe not where I am at. I think I might just make it where I'm at.
Just skirt by.
Just 34 degrees. I might just make it. But a little further north, where the citrus belt is, I don't see them being able to get away with it. So we're going to have a lot more frost down in Florida. And conversely, a lot of people ask questions about South America. And, we always follow the coffee market a lot. And we used to have a lot of frost. We used to frost regularly in the 1970s, in the 1980s. And we haven't had a legitimate frost in Brazil coffee areas since 1994. We expect frost to be a much more regular feature again down there. And, and because it hasn't happened in so long and people have assumed it's never going to happen again, the coffee market is another market that may have a massive readjustment if it has to factor in more regular frost along the way and a much more difficult time for Brazil to grow coffee. These are the kind of things that we try to think about, the long-term impacts to particular markets, if we're correct about this longer winter season in both hemispheres and early frost, late frost kind of scenarios to which markets could be most impacted. So,
cool. Well, if you need some cold weather gear ideas, let me know, and I can help you out.
Interesting, and like I said, I'm not here to, it's not a stock market program, at least the way we talk about it. But
right.
Just to think out loud, what would you need in a very, very long, endless winter with heavy snows and bombogenesis storms and all these sort of things coming up? You need a lot. What do you need? You need a lot of salt.
Yeah,
you need a lot of salt. Compass Minerals is the number one producer. They have salt mines, and the number one producer of salt. And so you could only imagine what might happen if we have salt for normal winter that we've known forever, and then we go into winter like this where we run out of salt and everyone's bidding up for salt. I mean, you could see a wild parabolic rise in salt prices, which obviously would greatly benefit a salt miner like Compass Minerals. So, not a recommendation. Everyone's got to look at, do their own research, of course, understand the risks, but an interesting idea of how we think about how one could participate in this. That might be one way that maybe not everyone would be thinking about, thinking about. So anyway, that's just an interesting idea that maybe it's further food for thought for people listening on the show.
Could be also natural gas and down jackets are going to be a big thing as
Anything
well.
when we're like boots are going to be in high demand.
High demand, especially in Florida because you don't have boots, you have flip flops.
We're going to want to know how to put them on. How do we put these?
What
on?
are laces? What are these for?
So, what are they for? We have moccasins down here.
Strings going through my shoes. What is this? All right. Well, good stuff, Shawn. This is good. If this is that podcast, I listened to it. It's amazing. Got a ton of information in there. If folks wanted to reach out to you and get more information about what's going on, Shawn, what's the best way for them to do that?
The best way is to go on our website at Hackett, Hackett, advisors.com. If anyone wanted to watch that podcast, because it is a pretty interesting one, we'd be glad to send it to them. They can email us directly, Casey, at Shawn, SHAWN, at Hackett, HACKETT, advisors.com. And just say in the subject matter, moving iron, weather podcast, and we'll get it out to them. We'll be glad to do that.
Awesome.
Glad to do that.
That's great, Shawn. Thank you very much. Thank you very much. All right. With that, I am Casey Seymour, and you can find me on Facebook, Twitter, and Instagram. That's where you're going to find the latest posts concerning the Moving Iron podcast. Also, movingironllc.com for all the latest information about what's going on with Moving Iron and Moving Iron Summit. And probably going to have to. I'm going to make an announcement now. We're gonna move the Moving Iron Summit from January to probably September sometime this fall. The reason for that is travel restrictions have limited the number of people that are going to be able to make it to that, and I think it's important. It's an event that's as much networking as it is anything else, and with the numbers that were there, we're going to postpone that and move it to a later date, and hopefully with everything that's coming down the line here with vaccines and stuff with COVID, stuff will settle down a little bit, and we can get back to normal here a little sooner than later, I hope. So with that, I am Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard.